Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Camilla Jeffs. She is a mom of five, has been investing in real estate for nearly 20 years, investing in live-in flips, single-family rentals, small multifamily, and most recently, large multifamily and assisted living. So thank you so much for being on the show.
Thanks so much, Charles. I'm really happy to be here.
So give us a little background on yourself over, prior to getting involved with real estate and kind of why you got involved with real estate, a little professional and personal background.
Sure. So I got involved in real estate very young. And at the time, my husband and I got married young. We were both still college students and we were, trying to figure things out. And basically, as it goes, as you're college students, you're poor. You have no money, right? So we're trying to find a place to live. And the only place that we could afford was someone's converted garage apartment thing. And it was a dive, right? But sometimes those are the funnest places to live when you're just married and getting used to each other. But we were living there and the landlady came around to collect the rent one time and I knew she owned several rentals. So I just kind of asked her, I just said, how are you doing what you're doing? And she responded back, she's like, well, you could do it too. I'm like, no, I don't have any money. She's like, well, no, what you should do is you should buy a house. I'm like, really, lady? I have no money. Did you not hear me? I'm renting your nasty garage apartment. And so she said, no, listen, you can go and buy a house that has a basement apartment in it, and you can rent out that basement apartment. And then you could live there for free or just a small monthly amount. And I was like, And then that's exactly what we did. We went out and we went from living in a nasty garage apartment and we bought a 6-bedroom home that had a pool in the backyard, and we rented out the basement, had a kitchen in the basement. And we rented that out and we were paying $150 a month to live there. So we're paying less than the garage apartment. So I always say that I got into real estate out of necessity because I couldn't afford anything else. Like we could barely afford a nasty garage apartment, and so we got something cheaper that paid us, which was pretty awesome.
Wow, that's awesome. Yeah, house hacking is such a great way of getting into real estate. And it's you can't really lose per se with it because you're getting this long-term debt. And if you have a way of getting consistently the other rooms or, like you said, basement rented out, it's safer. I know somebody that bought like single family houses and they would have like roommates. And I was like, yeah, well, what happens after like 2 years when you kind of don't want roommates or something like that? It's much different. Like you had a separate actual unit where everybody has their own ingress and egress, so you don't really have to run into each other or like using common areas. So that's a great way of doing it.
Yeah, it worked out great for us. It really did.
So after this experience is what really kind of pushed you along into getting further along in real estate. And what did you do after that, Matt? What did you do after this house hack? What was your next kind of forte into it?
Yeah. So the house hack really got me thinking about real estate and the power of real estate. And so, I decided to, double down and figure it out. So I read every book I could find on the subject, and there were not there were not podcasts back then. So it was basically just book reading, book learning. And so as I learned, I happened upon the book that had the strategy one house at a time. And basically the strategy was buy a new house every 2 years, you move in, you live there for 2 years, then you move out and rent it for 3 years. And then you can either sell it at that time and with no capital gains tax, or you can continue to rent it if you like, if it's going well for you. So I was like, okay, that sounds like an interesting strategy. Maybe that's one we could do. Again, not much money, right? We don't have very much money. We're both still trying to finish college and working part-time minimum wage jobs. So the next step we took was we bought a fixer-upper, and we decided, well, let's buy something we could add value to, and try this one house at a time strategy. So that's what we did. And we basically did, I call it live-in flips now. So we moved in, we fix it all up ourselves, and then we move out and rent it for 3 years, and then we would sell it after that. And we proceeded to do that like clockwork every 2 years for about 10 years. We would get a new property, would acquire a new property. And then I felt like that was slow. That was going slow because now by 10 years later, I feel like I know what I'm doing. And so then got into small multifamily and launched my own property management company as well. And we just really started going, right? Well, 15 years in to our investing journey, we have 5 children, and we've been doing everything ourselves this whole time. And I just got burnt out. I was in a space where I thought, this is just, it's so much work, right? And the cash flow is not super great. It's a little bit of cash flow, but because investing in single family homes, although you can hit a home run, but mostly we were hitting first base. Like we were first base, second base type hitters. And so we were trying to figure out, what do we do? Because we're just spending so much time in these properties. We're dragging the kids there, and it's good training for them. I don't regret it at all. I thought it was good training. They grew up in real estate, which I didn't, and I didn't have that opportunity. And so I tried to find a different way. And that's when I landed on passive investing, like joining a group investment in apartments or commercial real estate. And I was blown away by the concept. Because I thought, I can just invest my money instead of going out and buy, if it's taking my $50,000 and buying a single family home, I can put it into an apartment. Someone else will do all the work. I don't have to do any of the work. I don't have to spend any of the time, any of the stress up on it. And I'll get very similar returns to what I was getting doing everything myself in the single families. And that's what blew me away. And I thought, this is amazing. And so passively invested for a bit, and then decided that I needed to share the information with other people. And so I launched Steady Stream Investments, my company, as an education company to educate passive investors how to get involved and everything that they need to know from A to Z, and helping them find opportunities to invest in.
Oh, that's great. Just one thing before we kind of get to what you're doing now and passive investing, which I definitely want to dig into. What were you doing with, how are you financing? Because if people don't understand, like you were saying, you can own a place for 5 years, live in it for 2. You have 3 years that it's not your residence, and you can still sell it. And capital gains, I imagine there's some cap to that, but we're not, that's probably not applicable to what we're talking about. But how are you getting financing if you did it every 2 years? Because these are close by, so you're not able to get FHA, I imagine, between them, correct? Because they're within 100 miles. So how are you doing that? All conventional?
We're doing conventional. Okay. 20% down. Right?
Yeah.
Like all of our own cash, all of our own money. I had heard of creative financing, and I was scared of it. And I thought, no, I don't know how that works. And I was scared that it would go all wrong for us. So we literally DIY'd, which if you do it that way, you're going to have slow growth like we did, right? Like we could only get one property every 2 years because we had to save up the down payment to be able to get that property.
So when you were doing this, because that's definitely, I see that, because it's very capital intensive and very time intensive with the way you're doing it now. Obviously, 15, 20 years down the road, you're going to have a lot of equity in those properties, most likely, but it's a very slow way of growing, which we're talking about here. But what were you said you set up a property management company. When did you do that? Did you do it for those smaller properties, or did you do it once you got into larger properties? I just didn't know where that was in your timeline.
Once I got into small multis, that's when I
multis.
launched the property management company.
And give me like what was the benefit? Because I feel it's a great way because it's very fee intensive. And I've owned small multifamily for many years. We just sold our last ones, but like 15 plus years, started buying in 2006, and very fee intensive. And I self-managed them with a couple handymen like for 6 years, and then we self-managed them. So what were you finding? What was the reason? And that you made the decision to start managing them yourself?
Well, I mean, it just came down to cash flow, right?
Yeah.
Like, because we were inexperienced bookkeepers, and an experienced bookkeeper, you would still write that out as a fee. Like basically you would pay yourself for being the manager of the property. So you have that line item. We didn't think that way. We weren't that sophisticated in the beginning. And so it was just all about saving money and not having to spend excess money when we could just do it ourselves. Now it's a mindset issue, and it's a mindset issue that I've had to really work on, the DIY mindset, to, trying to do everything ourselves, because it definitely, I mean, it worked, right? We got a bunch of properties, but our growth is very slow compared to, a bunch of colleagues that I know today that have been able to buy 10 properties in 2 months because they are partnering and they are not doing everything themselves.
Yeah, it's definitely a mindset, but I think everybody has to deal with it, because I've definitely had to deal with it. And it was like, you look back while you're saying that, I think about all the times I did bookkeeping on stuff I own, and you're like, oh my God. And when we outsourced that years back, it was like the best thing I ever did in my life. I was like, this is, even if you're not spending that much time, you're sending to someone and it's going to be a lot less time than you do, because they're professional at what they do. And we're not professional bookkeepers and all this kind of stuff. So it's difficult. It takes definitely a mindset shift. So let's talk about like passive investing, because you got into that. And for you, what was the number one benefit you see of passive investing?
My time freedom.
Yeah, I agree with that. Yeah.
Time, like emotional and my emotional stability, because the stress of properties, the stress of being a landlord is a lot. I mean, I had situations that I hope nobody ever has to deal with when I was when I was managing all those properties. And really professional property managers do it way better than mom and pop people do, because they have systems and process, and they have rules and regulations, and you have to. I remember at one point someone was telling me, Camilla, you've got to pick your charity. Like, your business can't be your charity, because I was feeling so bad for some of my residents. They'd come in and be like, I just can't pay rent this month. And I'm like, well, I know you're in a hard spot. It's okay. Maybe next month. And that's no way to run a business. Right. Yeah. And so pick your charity. So you're donating to charities, but your business can't be the charity.
Right. Yeah. And it's a two-way street with those type tenants and everything like that. And you want to be fair and always be fair. But it's also one of the things too is, hey, I'm going to provide this, clean housing that's in good shape and condition, and I'm going to take care of it. And then, but when it comes to the first of the month, that's where it comes back. You know what I mean? And it's difficult, and you really have to train tenants from the beginning on that. And it's difficult to do it midstream. It's kind of from the beginning. You can kind of put your foot down, and if you hold that line, you're good. But it's difficult unless you bring in like another manager, like, oh, this person's now taking care of it, and they can come in, and now they're like, listen, we're not paying rent on the 15th anymore. So it's like, or you can pay it, but you got a late fee. And it's amazing, like with all different tenant stories of, stuff that happens of how they do it. But so let's talk about like what you're doing now. You've changed your focus. You went to small multifamily, you're into larger multifamily. Like, what's your current investment strategy with your business now?
Yeah. So current strategy now is all in commercial real estate. So I love the economies of scale of it. I love that, the professionality of it, that it's run as a business. I love the partnering aspect, that you don't have to do everything yourself. You can rely on other people. And at first that was another mindset shift that I had to go through, was because I was used to having control of every single detail. But now, I thought it would be a bad thing to give up control, but it's actually a really great thing for me because I don't have to do everything myself. I can focus on my one niche. I can focus on investors and educating and doing the things that I love. And then someone else can go find the property. Someone else can, be the one that's like putting together the construction plan and, all of that stuff, the things that I don't necessarily love to do. And I like that too. And so that's kind of right now we're all in commercial. And by commercial, I mean multiple asset classes and multiple markets. I like to diversify and I'm very conservative investor. So I want to make sure that the properties that I'm investing in have the stability to last through recessions. And the coolest thing about multifamily is that it is, it's so recession resilient, even the 0809 crash, right? Like single family homes took about 10 years to recover the equity they lost. Multifamily took one and then just kept going. And so it will hit small dips, but in the single family, there'll be big dips and multifamily will be like little mini ones that, and will be okay. As long as you're managing it right. And you'll have professionals managing the thing. And then the other asset class that I really like is assisted living or, in the senior living asset, because there's just so many benefits and the demand is really high and will continue to grow for years and years to come.
That's interesting because that's the one thing I want to talk about too is I've personally never invested into assisted living, and I've heard a number of people talk about it. And you go to conferences, you hear about it, and you hear people's strategies, and that's very interesting. And you kind of like want to, before I bring like investors in something like this, I like to invest into it for a few years and like figure out exactly what I'm doing. But what I find with assisted living, obviously I've never done it, so just kind of step in. But I really see it as two businesses in one, where you have you have the real estate. And you have like managing that. So you buy this property, it has to be managed, everything they would manage with a regular commercial property, whether it's multifamily or whether it's like a larger office, whatever it is. And then the second thing is you actually have to now your second, your second business is really the assisted living portion of it. And that's kind of like, so can you give an overview of like why you like assisted living with, it sounds like there's a lot more headaches with it. And I mean, how does that work?
Yeah, I mean, you're exactly right. It is two businesses in one. It's a real estate business and a healthcare business because we hire doctors and nurses and the staff to take care of the residents, and the residents need care. We're not just providing a house, like you would a regular tenant and say, okay, move yourself in and do what you want and feed yourself, right? We are there feeding the residents. We are there taking care of them. Someone's on call 24/7. We're managing their medications and all of that. So here's the thing. I'm a real estate girl. I didn't know much about healthcare. So what I need to do is if I want to get into assisted living, I need to partner with someone who knows healthcare, who's been there, done that, and knows how to run an assisted living facility. You bring those two things together, and right now we are building brand new construction for these facilities, and we're doing them in a boutique niche style. So we like I don't like the big giant ones that look kind of like a hospital. Like I wouldn't want to put my grandma in there, my mom in there. We're building large homes, and with like 16 bedrooms in each home, and it's complete with its own kitchen and library and place for the residents to really feel like they are still in a house. Because one of the hardest things, if you think about moving your grandma or your mother, father, whatever, into assisted living, is they don't want to leave their house because they love their home. And so if there's a step that's easier on them, where they can live in this bigger home with other people their age, it seems to go a lot better, right? The families that place their residents with us, they love it. They love the concept, and they feel like their loved ones are taken care of much better in this type of niche boutique style. But yeah, so you have to keep that in mind, that if you're investing into assisted living, you're investing into two businesses, both real estate and healthcare. The nice thing is both those businesses are stable, right? They're both very stable businesses. They're not businesses that are going to go away anytime soon. Real estate is here to stay. Healthcare is here to stay. And in fact, if you think about it right now, in the next 10 to 20 years, the number of people over age 85, which is typically, between in the 80s is typically when they move into assisted living, right? That will grow 111% over the next 20 years. So it is absolutely needed, which is why I'm super excited about it now, because we get in there, we build them all now, and then we lease them up. Of course, it takes five-ish years to get it all built and leased up. And by the time that we're done building and leasing, that's when the huge demand is right there, and we're ready and primed and ready to offer it up. So that's what we're excited about. It is what's happening with the future of assisted living.
So I've never had a close relative in assisted living before. And how does this work? Because this must be like $100,000 a year, I would imagine. You know what I mean? For someone to live in one of these, maybe at least 70. I mean, for everything put together. So are these people paying out of their own pocket? Is this like a long-term insurance that they have going into it? I imagine it's a mix of both.
Yeah, it's a mix of both, and with the projects, some of them are, ours is a little more high end, like the boutique niche style, right? Is a little bit more high end. So it cost more, but a lot of times the loved ones have insurance, right? Have elderly care insurance that they can use, or the families are paying, or they just have the funds that available to be able to pay for this type of thing. Now, if they don't have the money to be able to pay for what the product that we're providing, then there's other things out there that they can use too. And there is Medicare too. So sometimes Medicare will cover some of the assisted living costs. But you're right, it's not cheap. It's definitely not cheap, because it's 24/7 care.
Yeah. Okay. It was just, I remember an investor telling me this one time. We were driving by one years back, and he's like, well, there's only so many wealthy people. It's like a beautiful complex. And I was like, and I not knowing anything, I thought, well, that's a very interesting concept. I never even thought about, paying, I don't know, it's not something you really think about how people are paying, because you're like, oh, there's insurance, but does everybody have insurance? I mean, health, so.
And the other thing to remember is that residents aren't there for a really long time.
Yeah.
Right. It's the end of their life. And so they're there on average, they're there between 12 to 24 months.
Oh, really?
And so it's not a super long time that they're in assisted living.
Okay. All right. Well, that makes it, it makes sense now. Exactly. But so let's talk about a little bit about you. I'm not sure exactly when you did it, but you quit your W-2 and to focus completely on real estate investing and your large family. Tell us about like the decision and like how you prepared for it. Cause I think this is something that people want to start active or maybe passive in real estate, but making, whether if it's in real estate or in another business, they want to make the jump to being a full-time, entrepreneur, their own boss. So kind of how did it work for you? What did you do? And kind of what kind of mindset shift did you have to make for that?
Oh, 100 different mindset shifts. So I've always been someone who gets really excited about personal growth and learning new things and doing things and kind of being on my own. Sometimes I wonder if I was a bad corporate employee, but I did fine, right? I mean, I had good reviews and stuff, but I was always like, my brain was always itching for more, itching for something different. So as I'm, working in corporate and building my real estate business on the side, I really started just feeling like I need my time freedom back, because here I am, I'm working a full-time job, all day. And then I'm trying to work my real estate business in the evenings and on weekends. And I have 5 children, and they're all teenagers now. And I have very few years left with them, right? Like they will be gone very soon. And so I just knew I needed to get my time freedom back. And that was the motivation to work really hard on my real estate business so that I could have the time freedom to be able to do whatever we wanted to do as a family. And I could work from anywhere I needed to work. And I could take days off whenever I wanted to take days off, right? And so that was my big motivation. Now, the whole process to get to the point where you actually tell your boss. That was a process. And so for me, I take a conservative approach. I'm not one that's just going to burn the boats and be like, I'm done. Peace out, everybody. I was more methodical about it. So I said, okay, I have to prove to myself that I'm not going to put my family in a financial bind, because what I didn't want to do is I didn't want to exit my corporate job. And now we don't have money to do all the fun things that I wanted to do I had the time, right? You have to have both. You gotta have the time and the money to do the things you want to do. And especially, buying 7 plane tickets is a lot. So I'm like, okay, I have to be methodical about this. So as I approached it, I looked at told myself, Camilla, if you can replace 70% of your corporate income, and that's the point at which you can now exit your job, because you've proven to yourself that you can do it. And then as soon as I knew as soon as I exited my job, I'd be able to produce that other 30% very quickly. And that's exactly what I did. I got to the point where I had replaced 70% of my income. And that was the point where I said, okay, boss, I'm leaving. And, worked with my boss to make sure I finished up some projects and stuff, and then exited. But you know what happened? Those first 2 weeks, it was rough. It was like, because you go from being this corporate, this corporate person who has a full schedule, like every second of your day is mapped out, your calendar, there's no white space. You quit your job. Now you're full-time in your own thing, and it's all white space, right? And I have to be intentional about filling that white space. And it was jarring for me. It was very jarring for me to go from that. And then the other jarring thing was just the income, because I was used to the steady paycheck. I was used to every 2 weeks it got deposited into my account, and I never had to think about it. My account always grew because we always lived below whatever we were making. And so the account always goes up. And now my account, goes up drastically when I close the deal. And then just, goes down, 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 down for a few months. And then, back up again, and it's like this roller coaster ride. And it's very crazy. It messes with my brain to watch my bank account slowly decrease instead of always increasing. But, it's bigger than it was, last year at this time. So that's a good thing.
There you go. It's great that you have the proof of concept is such a important factor in anything. Like when you're working your own business or you're making the leap like you did to going full time in it. But since you have that proof of concept, then you're like, okay, now I can pour the gasoline on, you know what I mean? And really take it to the next level. Because in the beginning, you're like, that's why in angel investing, they're always like, oh, minimal viable product, so when you hit that, then you're like, okay, now we have something that people like and we can go from there. But if you don't have that, it's kind of difficult for people to believe in, or yourself believe in what you're doing. So that's great. That's fantastic. So one thing I was reading when I was preparing for this episode, and was saying that you're obviously very conservative. You're very risk averse and safe when you invest. You were doing a lot of projects without debt or with minimal debt. Is that correct? In some of your previously in some of your projects you were doing?
So one of the projects we did without debt, yes.
And did you said that is that something that you would avoid doing again, or was that something? I mean, it sounds very safe, but also it can really hamper your returns. I imagine that's what your thinking is.
Yeah. So let me tell you about my $1 million mistake, right? So we acquired all these single family homes, and one of those we did acquire without debt. And because we got caught up in a financial guru's preaching, and he's super awesome, right? Dave Ramsey. He's super awesome. He has really great advice, right? For people who are in the beginning stages of their financial journey. Super great advice. Have an emergency fund, pay off your debt, all these things. But once you graduate from that beginner stage and you enter the intermediate stage, where now you're like, okay, I've gotten rid of all my debt. I have a fully funded emergency fund. Now what? Now it's investing. Now it's the time to really invest. And his idea of investing is debt-free investing, right? He doesn't think you should be in debt for anything. Well, 10 years into our journey with all these single family homes, we started really listening to him a lot and kind of getting inundated. And then I started thinking, man, maybe we're doing this wrong because we have debt on these properties. And I can see the vision. If I didn't have debt, I'd be having so much more cash flow than if we did have debt. And we got so far into it that we sold most of our properties.
Wow.
So we could have some that were debt free, right? That was $1 million mistake, because had I not sold those properties, I would have several $1 million from those properties, right? And so the thing is, I've come to realize, and even then, after that, I went and got my MBA. And in my MBA, we were in corporate finance class, and we learned very clearly, and the numbers show it very clearly, that a corporation, any business run without debt is a poorly run business.
Yeah.
You cannot run a business without debt, or you're just not gonna survive. Which sounds counterintuitive, right? Until you really look at the numbers and you see the proof on paper that you need to have some kind of leverage in your business in order to run your business well, and bring in the right amounts of revenue and grow and scale and all those things. It needs leverage and needs debt. So I'm a big fan of leveraging debt for real estate. Real estate is such a great thing. I'm still not a fan of debt for cars or debt for boats or, those types of things like depreciating assets. No, but anything that's appreciating, although COVID kind of threw a whack into that because some cars appreciated through COVID. But that's not normal.
No.
But anything that's appreciating definitely can be acquired with debt, and it's smart to do so.
Yeah. No, I remember listening to a show years back, and when he was closing out one of the segments, he goes, this plan gets you to 1 to 5 million net worth. It won't get, like, these concepts won't get you to 5 million and above. And you're like, oh, that's true. Mm-hmm. That's completely true. Because that's exactly what it is. But most people that really have to subscribe to it, they really are in tough shapes when you're listening to what their story is. So there you're like, yes, you shouldn't have any debt at all, because you don't know how to control your finances, but you're a much more sophisticated investor. So it's something where you can kind of, you can start, I think leveraging a little bit more, and you get higher returns, but also you're not going to be able to win investors or win deals if you're not taking on debt. Even the most conservative, like core investments that are 40-50% loan to value, I mean, they're still taking on debt to get some returns on those properties. I mean, they have to be able to get it, or it won't hold up with inflation, and it's completely crazy. So,
right.
But, so what are those? That was your $1 million mistake. Give me some common mistakes that you might see other real estate investors make as we close up here.
So one mistake I've been thinking about a lot lately is the mistake of not asking enough questions. And so I think sometimes, and I fell into this too, I didn't want to look stupid. I didn't want to look like I didn't know what I was talking about. I didn't want anybody to brush me off because I had too many questions. That's totally the wrong approach. And I think a lot of real estate investors get into this where they are afraid to ask questions. Because here's the thing, say you ask a question and your worst fear comes true and someone thinks you're dumb, right? They'll answer your question and they won't work with you, but that's fine. Now you at least know the information, right? And then you can move on. And now next time you go to put an offer on a property and someone says, well, send me proof of funds. Now you know what even proof of funds means. And right. So it's totally okay to, don't be afraid to look stupid, or just ask questions, because it's the only way to learn and grow, because all of us start at zero. I call it infant brain, right? If you think about an infant, they have to learn everything. And when they're at the stage of they're starting to walk, they don't just stop because they fell down, right? They just keep going and keep trying and keep trying and keep trying, right? At some point in everything that we're going to do in life, we have to start at point zero. We start with our infant brain, and then we have to just continue moving forward a little bit at a time, little bit at a time, little bit at a time. And soon you'll look back and you're like, whoa, I've grown up. I'm a grown up now, right? And so it's, you have to be comfortable with that.
Yeah. No, I remember getting my first commercial mortgage years, decades plus back. And it was, I didn't know, he was explaining to me what a prepayment penalty was. because you only done regular residential, you don't know what that is.
Right.
And I was like, step down. All right, that makes pretty sense. I got that. You know what I mean? But it was like, that's 10, 12, 15 years ago, whatever it was. And so you're like, it's completely different. It's just like you said, you do a little bit, you learn more about it. And now, all the different types of prepayment penalties if someone asks you and all this kind of stuff. And you're now somewhat of an expert. So what are the main factors that have contributed to your success over your career, W-2 into real estate, either or?
Never quitting. I mean, simple as that,
Yeah.
right? Like, I mean, there's so many things that you like, profound things you could say, but for me, it's literally never quitting, having the grit to just keep going. Even on the days that I don't want to keep going, or even on the days that are really hard, even when you get kicked in the teeth and, you have to deal with situations you never thought you'd have to deal with. You just don't quit, right?
Mm-hmm.
Success is almost guaranteed if you don't quit.
Yeah, it's crazy. It is. It's consistent things every day and the right things, and you become successful after a certain amount of time. So, Camilla, how can our listeners learn more about you and your business, SteadyStream Investments?
Yeah, please visit my business, SteadyStreamInvestments.com. On there, I have a free course all about passive investing. It's called Passive Investing Made Easy. It's super simple, breaks it down, especially great for the first time passive investor. If you've never done it before, it's a really great course to pick up. And then through there, you'll be able to schedule a call with me. And I'm happy to chat with any of your listeners about investing in general. And or if you want to be an active investor, feel free to reach out. I'm happy to share, lessons learned and talk about your journey and what's happening with you too.
Well, thank you so much for coming on, and looking forward to connecting with you here in the near future, and have a great rest of your day.
Thank you.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.